Most first-time fund managers pitch investors on a thesis. But today's guest pitched them on 10,000 data points, a decade of evaluating startups across Latin America before he ever wrote an outside check. This is the Top Decile Podcast. I'm Connor Sattely with Decile Group, and today's guest already had 2 exits before his VC fund even existed. My guest spent a decade evaluating thousands and thousands of startups across Latin America, funding 120 of them through Imagine Lab, including 2 acquisitions, which tripled his investments. Today, he's a managing partner of Imagine Ventures, a pre-seed and seed fund backing the future of work and future of finance across the region. Happy to welcome Javier Cueto. Javier, welcome, man.
Hi, Connor. No, it's great to be here, and it's been a long journey, and Decile Group has been a really relevant part of our journey, so I'm more than happy to be here.
Yeah, well, you're such a genuine and authentic part of our community, man, so it's really a joy to welcome you. And I got to hand it to you. I think doing early stage investment in LatAm requires a lot of local knowledge, a lot of community knowledge, and some bravery, because the success rates can sometimes be dim, not just in Latin America, but around the world for early stage investing. So how do you develop the conviction to invest when the early stage can be so risky? What are the signals that you look for?
It's great. And I think part of the answer is the evolution that we have had in the last 13 years now, because we started as an incubator. And myself as well, like my first job was in a different incubator and a university incubator. So like I will say all my professional life has been working with extremely early stage startups. So I think it's kind of part of my DNA. I've never worked in a corporate. I've never worked like in an established company. So like I've never seen, I will say, what is like the traditional business world. I always been involved with entrepreneurs, with startup, with investors, at the end with uncertainty. It's been, I would say, part of my entire professional career. And the conviction, so in the case of Imagine, to start talking about the incubator a bit, it came from the founders. So the founders, all of them were entrepreneurs. All of them were related to technology. And basically, what happened in Chile at that time and in LatAm, I would say Chile was the most advanced example that you could find in LatAm at that time in 2012, 2013, because we only had university incubators in one side, or we had the government support, but we didn't have any players from the private sector. And that's where Imagine comes as a value proposition. It's like we want entrepreneurs, people that have created companies that have failed, to support the new generation of entrepreneurs. And that's how we created a partnership with Microsoft. We got government support. We managed a government fund. And that's how we were able to review more than 10,000 startups and invested in 120 of them with almost 30% survival rate, which is pretty high since we are talking that idea. I mean, this is not even pre-seed. This is like literally a PowerPoint presentation. But we also did this in a really like smart way, because our money allocation was like 2/3 of the fund went to the third that survived, because we didn't give the same ticket to everyone. So it was like an evolution, like since we were seeing milestones and they had KPIs to achieve. So, and I think that's a bit different from the mindset also compared probably to Silicon Valley or the US. I will say here we are a more, since of course it's the market are different, like the potential exit are different. We are more data driven in the way that we are looking for sustainable companies rather than companies that just grow with no like sustainability model. So that's something that as a methodology, we started really early as an incubator trying to achieve. I mean, at the end, we could start giving checks from $10,000 up to $150K, but the ones that got $150K was because they got revenue, they got clients, and they got investors. So, I mean, if they didn't achieve those milestones, we were not able to give them more money. So I think the incentives were pre-aligned, and that's at the end how we create the community, as you say. So we start first just investing in Chile, then we start working with incubators and accelerators all over LatAm. Then we develop also corporate connections. We did open innovation. So at the end, we became this kind of regional player. I mean, even though we just had offices in Santiago, and we create this kind of machine, as we call, where we were able to, connect with all these startups. And the idea then to move to a VC was how we can do this in a regional scale, how we can take all those, at that time, more than 10 years of learning, and say, hey, okay, now how we can connect also with the private part of investment, connecting with LPs, and trying to bring this, now that the ecosystem was more mature, into a new reality. And that's how we evolved to a VC.
I love hearing about that. So drill in on the ecosystem part. You said you're seeing a maturation of the ecosystem. It reaches a certain point where maybe it can support some VC funds coming in. What are the signals that you're seeing in the LatAm ecosystem that make it a fertile ground for a VC to come in and invest?
Well, I think what happened, all around the world, like in 2021, early 2022, we had this kind of bubble of VCs. Of course, it was like all these micro economical factors that were helping getting a lot of money out of there. And the positive outcome of that was, like you saw, like at the end, LatAm, when we see in percentage, was the region that grew the most in VC investment, because at the end, I think that we were a bit late into the market, but then this kind of bubble helped in a positive way to create more VCs, to see this as an asset. Of course, you have the downside that we had this like ridiculous valuation, startups like just raising and growing without a sustainable model. But I think at the end, what we figured out is that LATAM have unique opportunities that make it attractive as a region to invest. So one, it's like an evaluation arbitrage. So at the end, when you compare, when you're investing in the US, you're investing in Europe, you can invest in a startup with more traction and with half the valuation probably that you guys are investing there. And if those startups then scale into the US or Europe, then the markup that you can have is much, much higher. Also, there is, since we are many countries, the good thing is we share a language. Like Spanish speaks like most of Latam except for Brazil. So it's not that difficult to scale into new markets, which is opposite what happens to Europe. And there is substantial, at the end, gaps that needs to be fixed. So for example, productivity, technology adoption. And those are things that took us a bit to the future of work. And we say, okay, here what we are seeing is that today is a lot of technology advanced, but corporates still are too traditional. The technology adoption is pretty low. There is today not a focus on people as it should be in order to get more productivity. And that's how we identify this opportunity. And now what we've seen is that at the end, the emerging VCs in LATAM are growing. I think LATAM has this good thing that we don't need huge funds. We don't need 50 million, 100 million funds. And at the end, when I think between 5 to 20 million, we can find a lot of funds that are at the end also pretty hands-on. And I think that's something pretty interesting because at the end, and one part, I will say one key part of our thesis is we are not Silicon Valley. And when we explain this to our LPs, it's like we are not looking for unicorns as a mandatory thing. We are not looking to invest in 50 startups. We are not doing this pray and pray model. We are not looking for IPOs as a part of the thesis. Because that's it. I mean, even in Silicon Valley is like the exception. When you look outside Silicon Valley in the US, it's hard that to happen. What we are targeting at the end is M&As. And for that to happen, or secondaries, we need to have companies that are attractive. So at the end, we are not looking for one company to pay the entire fund. What we are looking is to have hopefully more than half our portfolio live with a sustainable model growing and that they could be attractive to sell. And that's a different mindset. That's a different model. And that's something that we want to push. It's like, hey, we don't have to copy Silicon Valley because we are not Silicon Valley. So we are probably, I mean, hopefully we will have 100x cases of portfolio return, but probably that in the region is going to be really, really hard. But instead of having one or two pay in the fund and the rest with zero return, why don't we have more than 50% of the fund returning and probably getting the same multiples of return as a fund that is still attractive, but with a different mindset. So at the end, I will say that's something that's attractive from LatAm. There are a lot of big players coming to do M&As like Bisma from Europe, Constellation Software from Canada. They are buying a lot of tech companies in the region. So I think there is traction, but at the end, we need to have a different mindset as a VC. Because if we, at the end, our goal is to be more, what I say, going more in the more marketing side of it. No, we are looking for the IPOs, for the unicorn. I mean, hopefully that could happen, but it's going to be, and what history has shown in LATAM, there are like really few cases that happen. So if you're basing all your model in that, I mean, at the end for a statistic, it's going to be impossible. I mean, like very, very few VCs will be successful, and that could be harmful for the region. So at the end, I think the funds need to adapt their strategy into how the region works.
I love this. I think that there's a lot of people that listen to these episodes that have heard a lot of sort of Silicon Valley style investors explain the 100, 150x case and the power law and what that means for venture returns. And you're really making a case for a different model, saying, hey, if we can care for the long tail, if we can get good returns, if they're not meteoric returns out of the majority of the portfolio, we can still return as much as the Silicon Valley funds, but we just do it according to a different model. Do I summarize it correctly?
Perfect. I mean, and just to be clear, I mean, we hopefully get 100x. I mean, but at the end, is that we need to also be understand that at the end we're in a different market. So
Yeah.
at the end, Silicon Valley has special circumstances. I mean, you have the startups, you have the top universities, you have the corporates, you have the you have everything in order to have that to happen. But that doesn't replicate all over the world. And that doesn't mean that the other markets are not attractive, because the downside of Silicon Valley is like huge valuations, this huge pressure of unicorns. So at the end, it is not easy to get these returns, even though there are the circumstances. So what we are seeing here in LATAM, we see a lot of companies being bought between 50 million, 100 million, 150 million. So as a fund that invests at a 3 to 10 million valuation, I mean, we can get really attractive multiples also, probably not 100, but we could get a 20, 15x. But if that happens in not one or two startups, it happens in 5 or 6, then at the end, you get the same return. And at the end, is changing a bit this like power of law in the VC, is trying to say, okay, we cannot expect that what happens in Silicon Valley is going to replicate in every single market. And that's the main issue that the early VCs from LATAM are having right now, that they started in 2015, 2016. They're already in the 10-year span, and the DPI is not showing. So and that's harmful for all us, for example, if emerging managers, because a lot of feedback we get sometimes from more institutional pieces is, hey, we invested 5-7 years ago, we haven't seen a single dollar, and we want to wait and see before investing in new funds. So are you kind of the egg of a chicken situation for the new managers? So it's important to at the end show that you know that that's an issue and you have a strategy, because at the end, if you just go with the speed, I'm looking for a unicorn, I just looking for one that will pay the entire fund, probably it's not going to be the best strategy.
Sure. You're sounding like the fund that they invested in 10 years ago that they never heard from again.
Exactly.
So I'm really glad we dove into that. I'd love to chat about the limited partners, LPs, who have joined Imagine Ventures Fund 1. Who are the LPs that come along on this journey with you? Are they primarily, around the corner from you in Chile? Are they regional? Are they around the world? What are they doing? Are they involved in a particular industry like future of work or future of finance?
All right, really interesting question. And I think, well, a lot of them, and also I've been at the end thinking this fund as kind of a spin-off of Imagine Lab. We had the opportunity to meet great people all along the journey. People from Microsoft. Actually, we do have investors from Microsoft from the US and from Chile. Because they knew all the story. I mean, they knew us from the idea, how we evolved. Actually, our main LPs are basically from this group, but we also had mentors that they were from different corporates, they were from different entities, from consultancy firms, from people, I don't know, from Google. So they were really related to the tech ecosystem. And then we also start finding this, I will say, high network individual profile that was like the main profile for our first fund. And we got mostly people from Chile, but we got people from Bolivia, we got people from the US that at the start that they were interested in seeing how they can evolve and how they were able to connect to this investment ecosystem in a different way. So those were, like, I would say, the main profiles of LPs for us in our first fund.
Let's talk about deals. Before you jumped into VC, in some places you've said you've seen 10,000 deals. So it might be something close to that, more or less.
Or more
What?
now. Today is more than 12,000 because those
Wow.
when you add now the VC kind of deal flow, it's more.
Yeah. So walk me through the deals that you're looking to make now with Imagine Ventures Fund 1. I'm not asking you to pick your favorite or call your shot or anything, but to try to bring to life this concept of future of work and future of finance, can you help make the thesis a little bit more real for us by maybe explaining a deal or two in these areas you've looked at?
Yeah. So, for example, in the future of work, one of the things that we saw a lot as a change, of course, after the pandemic was like this hybrid model, or now the opportunity to like digital nomads where you can work anywhere. Our companies were also hiring people from all around the world. So one of the companies that we invested, that's from Uruguay, that's called Board, they created a model of like IT assets logistics as a service, which was pretty different model that probably before the pandemic didn't make much sense. So basically, they take care of the onboarding, offboarding, maintenance of all the IT devices that an employee could need. So if you are in Chile and you hire someone in Uruguay, you don't need to take care of, they need the computer, they need their services. And if you fire them, and that's the company that today it's the biggest one in our portfolio, is profitable. And that shows a perspective of the future of work that it's different in a way. Or also we invested in one that is more focused on mental health. Because at the end, one of the things we are looking in the future of work is also the well-being. I mean, it's not just productivity, it's just not adopting technology. It's also like caring about people. And that's also an investment that we did in Mexico. And then, for example, another that's called AIDA, we saw, for example, that they pivot the model, but at the beginning they were trying to, at the end, help micro business owners to adopt technology and sell through WhatsApp channels and everything. And at the end, those were people that always were informal and didn't have this connection with technology. So, for example, those were some examples, because at the end we saw the future of work at the end at the employee level, or the tech adoption, and also sustainability. I mean, we invested in companies that today are shifting industry to be more sustainable, and the future of work, because a lot of people just focus future of work like HR, and it's more than that. I mean, it's way more profound than that. And in the future of finance, we have invested in, for example, Avance in Colombia, that there's full financial inclusion. Actually, it has also a future of work perspective, because it's a like B2B2C model where they make these deals with corporates, and at the end they can do microloans for the formal employees. And that's a benefit that they include and they are growing, that they have given more than $45 million in microloans in Colombia, which is pretty cool. And we have another one more focused on financial infrastructure, such as Relief, for example, that they are helping bankings today to do all the loans and the credit scoring much intelligent. And they scale that into different verticals, not just banking. Now they have like 3 verticals. So yeah, we have those kind of examples. And one thing that has been pretty awesome in a way, that we've been investing for 4 years and we have 100% survival rate. And that's also, I mean, that focus of shifting for looking for the unicorn and to look for a more financial sustainable portfolio. That at the end, it's kind of also the approach that we are validating and that we are putting in our new fund as well.
It's a really cool approach, and it's such a cool extension of that 30% survival rate you mentioned earlier. With all of those ideas, right? Just at idea stage and with an incubator at the earliest stages, 30% is incredible. But then a VC fund, 100% survival rate, most VCs wouldn't even dream of predicting this or even trying for it. But it's
I mean, yeah, and
nice
for
to
the
see
stage
how
we are,
that
because
carried over from your early career until now.
exactly. I mean, we know that's not going to be 100 until the end, but for being more than 4 years, we expected one or two to be a write-off right now. And so hopefully hasn't been that way. Of course, there is a couple that we know that they need more support or they are not in the best position. But so, of course, you create a ranking, you have the high potential, the lower potential, but at the end, it's a way also of trying to build this methodology, and that's something really interesting we are seeing today. At the end, also with all this AI revolution, um, I will say now that the barriers of entry are lower. So we are focusing a lot on what are the barriers of exit for the portfolio. So how you create a better service or how you create adjacent services that at the end are going to make harder for your client to leave. And before, hardware was really unsexy, and now this mixed hardware and software is becoming sexier, because at the end, it creates barriers of exit for the startup. So I think it's pretty interesting what's coming, and we are always adapting also into our thesis and seeing what things are changing. And I think that's also at the end how you get to new LPs as well, like trying to look for new things, new topics, and it's always challenging. And at the end also that's something that it in the region is kind of the egg of a chicken, because you do have institutional players, but they are looking for big funds. But you say, hey, but doesn't make sense in LatAm to have those big funds, because they are kind of trying following more like the US model, European models. So I think for emerging managers in LatAm, it's hard when you are between, I don't know, 5 to 15 million range funds. At the end, it's a lot of individuals LP, high network, some family office. So it's not easy, and it's a lot of networking and creating at the end these relationships.
Well, I'm really glad that you brought that up. That was going to be my last question. Is you had mentioned earlier, and now just again, about how it's a special need of LatAm to have smaller VCs that really know the community, that are based regionally, more hands on the founders. And what we see with VC Lab and Decile Group is a huge surge in demand to start these micro VCs in LatAm, but the road is very tough. So now I know it feels early still on the journey, but you're in the promised land that many first-time fund managers would want to be in. Do you have any words of advice for folks who might be starting similar, smaller funds to what you started, on how to be successful in that first fundraise?
Yeah, and I think the best advice is to create community. Here in LATAM, unfortunately, people are pretty traditional in investing. So at the end, you need to first show that you know what you're doing and you're not coming here just because it's popular to invest in a startup. And in our case, having the accelerator, having the incubator, it proved that we knew what we were doing. So at the end, you need to, if you created your startup and you were successful, if you were able to invest in a couple of, bring track record. At the end, here in LATAM, I would say probably another, it's easier. People get more inspirational. They love the thesis and the team, and they will invest. Here it's not that easy. You need to show that at the end you have the network, you know what you're doing, you have the track record. So my main will be create community that at the end gets to know you, gets to know what you're doing, gets to know your track record, show that you can provide more than financial value. A lot of people want to invest for the first time. They want to learn. So we did, for example, a lot of master class and things for our first fund for our LPs. And that's how you get, and you at the end get them closer, and it takes time. So like if they tell you, hey, the US in 4 months, you can do a first closing, just double that time in Latin America, because it's not that fast. Unfortunately, we hope we will be, but things takes time. People are more traditional, are more conservative. So it takes double the work in my experience.
Well, Javier, I really appreciate you coming on. It's you're always such a loved member of our community, and I think your advice really holds for people who might follow in your footsteps. Create community, expect delays, but also be genuine and really know what you're talking about, because that's the signal that LPs will listen to. So thanks for coming on to share everything that you've shared today. It's really great to hear about your journey.
No, thank you, Connor, and thanks everyone. I hope it works, and no, really glad to be part of this community of Decile.
All right. Thanks a lot, Javier. Bye-bye.
Take care.